Hi guys, welcome back to another video. Today we're going to be talking about my April trading recaps as well as the market, what's been happening and what's been going on in the last couple of weeks. So we're going to first and foremost start off with the Fed interest rate hikes, right? So essentially the Fed has saying that we're open to a 50 basis point hike recently, and we need to remember that the Federal Reserve is far more calculated and less reactionary than the average investor. They only have two goals in mind. One is economic growth, and the secondary goal would be to maximum employment as well as price stability. So asset prices, stock prices are not what they're most concerned with. They are trying to maintain the running of the economy, and when doing so, we can see that, you know, in July they were like saying they're going to reduce the balance, they're going to raise interest rates, right? They're going to say that in July, but right now they're moving that timeline forward towards May and even April right now in our current, like the upcoming FOMC hearing. So what we can see now is that from having a couple of Congress members wanting to raise it, they're actually a lot of them being open to this more aggressive interest rate hike and policy tightening, and the Feds are tightening this kind of monetary policy. We can expect asset prices to drop even further, right? That's my own basis, my own opinion. But going on into the specific stocks I'm looking to, obviously, you know, I trade Bitcoin and Tesla, and I trade a lot of other stocks here. I'm also dabbling into Forex, and you'll check it out on the Telegram channel below. All the good stuff, the video lessons, the referral links, yeah, check it out. Okay, so I've been looking at this 48K region for a couple of for a while now actually, as it was running up. The reason I did so was because in seeing this trend line, right, we saw that it's obviously dropping down, and this is probably a 0.38 or 0.38 retracement level. So I actually saw this as a very significant resistance in the first place, right? And above that, I also saw that when it first went down to 60K, this was your first point of support, right? This area. And in supporting here means that a lot of people were buying into this region. After this big drop, they thought, oh, we're at a discount now, we're going to start buying. But then they had to see further losses, and they were underwater on their longs and their spot positions. With that being the case, as it ran up, they are willing to sell at break-even price because nobody likes to take a loss, right? So that means that there'll be a lot of selling pressure where there was a lot of previous buying pressure as it dropped. So that's basic market technical analysis, right? And also it's also your 0.382 retracement. So I did expect this place to form considerable resistance, right? So I was already expecting this region for a while now. And you might be thinking, oh yeah, did you short there? Of course I did. But after a big run up here, right, we also are looking at a consolidation. Because when it runs up, the market's undecided. We are still forming a wedge or a bullish flag, correct? So if you are not profitable, you got to figure out why, you know, like this is actually a pretty technically sound area to trade. And crypto tends to be one of the easiest to trade because there's no fundamentals to it. It's mostly just technicals, right? And above that, okay, we look at the wedge here. After a big run up, it normally forms a bullish flag or a wedge, right? And as it came along, I wanted to play this flag and the wedge first before I played the drop. So that's why I wrote in the chat here, right? I'm looking to play the consolidation wedge here at March 29. So I already knew that there will be a consolidation wedge on March 29, and I was saying long support here or short resistance. So let's go into the more nitty-gritty of it. We'll go on a shorter time frame. I'll be explaining all my rationale inside the private Telegram channel and my trades because I want you guys to learn from what I'm trying to teach. And at the same time, I'm just sharing. So just take it with a pinch of salt, but essentially, I took my first shot here at 47.9. There was no long to take because it was already running up. So I took my first shot at 47.9, and I said to put a stop loss at 48.085, which it did break, but I adjusted the stop loss later on here. So I said adjust the stop loss to 48250, and I held it on all the way to here. About 8:56 PM, I say you can put the SL now and take profit after it ran up. So generally for stops, I think that I said that you have to be a bit more flexible at the starting point. But what really helps is to use previous profits to compound on, so that you can use your profits to give you some more buffer. Because when you're trading crypto or this kind of derivatives, it tends to be extremely wicky. The reason why they are so wickish is because when they are allowed to use derivatives and the leverage is high, this causes a lot of artificial volume, and liquidated shorts and liquidated longs cause artificial buying and selling pressure, which are not true reflection of the price action. Alright, so you got to screen out this kind of data. I hope what I'm saying is making sense to you. If it's not, I'll do more video lessons on it. You can check out my website. Okay, so I did say from that region that I'm going to look at two areas to take profits at. One would be 47550 and one would be 47155. So if we zoom in a little further, these are the two regions I wanted to take profit at, which was your 550 and your 125. So I did decide to take two take profits here. instead of endlessly kind of reshort it, even though I believe that it goes here eventually, it doesn't mean I keep adding shorts as I go along. No, I'm someone that likes to take profit and de-risk. So I take 50% here, I take 50% here. And if you go and look through the chat, I did take a 50% here. So I was done for the day, I assumed that. Then I waited for the next day. I think it actually didn't even happen the next day. It just went down further. And I already had my exits laddered, so I didn't really sleep. I don't really sleep that much. I watch the markets, right? But I try to do my own thing as well. So the close TP is around 47185 and the flip long is 47125. Why do I have the flip long below the close of the short? The reason I do this is so that we can ladder out exits to ladder in new entries. So we have a lot of buffer. What I'm saying is that, like, as you close out your shorts, you're opening longs right at the bottom of it. So even if your longs don't trigger and all your shorts close and then it bounces out after that, it's not the worst thing that happens because you get a perfect exit and you are psychologically not so damaged by that movement, right? So basically, I use the ladder of the exits to buffer in for the new ladder in the longs so I can get a very good long entry. So my long entry is about 47125 right here. So SL should be right around the blue line, which was, if you look at the blue line here, I think it's about 46.9. I'm putting a stop loss around here. So it didn't trigger, I mean, it went to 46.8, 46.9, but you got to give yourself some kind of buffer with that kind of longs. So if I'm not wrong, it ran up right after that. It's better to buy also on the way up compared to on the way down. So you let it break down first into the 46.9, then you buy on the way up, right? So I held this long and I drew this is the wedge I was drawing, right? So if you can see from this chart, there is 3 lines. This is your smaller triangle and this is your bigger triangle. So there's a smaller triangle within the bigger triangle. So we got a perfect long entry at 47.1 to 47.125 to 47165. And we make sure to stagger our exits towards 47737. So these two regions. I took exits here, but I also was potentially looking for a flip short. But I said to place a further out SL for this next short, maybe 48.2k even. So you can see this unedited. I was willing to tank the pain until 48.2 even if I took a short around here. Because I was fully aware that I could use these profits to buffer for the next one, and you can't be that precise with crypto because, like I mentioned, it is a derivative. You're trading derivatives which have a lot of leverage and wickish movements, right? So I said use the profits as buffer and of course stick to your same size. The reason I keep emphasizing to stick to your same size is because that you are only opening up what you could previously risk and what you previously took profit of. So you have some kind of buffer there. Alright, so we did get some exits at about the 47.7 and yeah, nothing much to add here. We got a 47.7, I exit full TP on the longs and I started laddering new shorts. So by laddering new shorts means I'm starting to short within this whole region here, right? But obviously I have to take the pain until 48.2, which I mentioned. So I started laddering new shorts and I waited. So still in this last short from 47.7, I was around here, I was in the shorts already and I was a little bit pain now, of course. But considering I had previous to buffer with, I just held on to the short. I believe that this trend line would hold, so I held on to the shorts. And anyway, we had some gains yesterday, so holding the short down. So wave E tends to be most extended and I wasn't looking for longs already. Generally what I mean is that you're trading your A wave here, your B wave here, your C wave, your D wave, and you gotta be concerned with your last wave. Your last wave tends to be the extended wave or where it breaks out. So I'm getting more cautious as the wave form, right? Your A, B waves are quite simple to trade. Your B, C waves are quite simple to trade. But when you go to your last few waves, you're a bit more cautious with it. Those are Elliott waves, okay? So I'm going to go that into more detail in my video lessons. I'm going to do some video lessons, but stay tuned for that. Right around this point on March 28, 29, I'm also predicting that it will go to 43.6 to 43.8, which is the current price right now. So I did say that we are looking at a larger time frame drop because that is your high time frame resistance, which I say it will reject hard. But before the rejection, it still needs to consolidate. So I'm trying to explain how I trade this consolidation movement, right? So this is part of the consolidation. I'm trading 48 short into 47 long, 47.7 flipped into a 47.1 long flip into a short flip here and there, back and forth, playing that whole wave. As it comes close to the end of the wave, I'm thinking on the larger time frame already. Okay, I'm going to take a smaller shot and I'm going to hold it down to 43. That's what I'm trying to rationalize, right? So that's what I did here, right? So as we go along in this chart, let's see, where did I take my next move? I took a shot here and I held it. So I was willing to hold it all the way because as the waves form along, I want to look at my larger time frame. And obviously I still have a stop loss at 48.2. But because I took this, and I have my stop loss here, I'm using all these profits, not all because I took about maybe 1.2k movements here and I'm letting myself buffer for a $300 movement from 47.8 to 48.2. It's about $300-400 movement. I'm willing to wait, you know. So I wait. And when you finally reach a significant support, which was about your 45.5k on your April 1st, when it first broke down to 45.5 here, I finally took a take profit, because that's also where I discussed on 28 March above here that this was a eventually safe that I wanted to take profit at. So I started taking profits here. I also attempted a prospective flip long, right? So this was a little bit of a bad move. I think it was one of my losses among this whole thing, but it was not that much of a loss, because I said that I was going to flip long but a small portion, because I still believe that the general trend line is down. If I believe the general trend line is down, I'm taking smaller positions on my long than my shorts. So I took a long here, I got stopped out here. I did mention I get stopped out, loaded some in at 45.5. I flipped long here, which was pretty unfortunate, and I was aiming for 46.6.3 to reshort. Honestly, the risk reward wasn't that great, because I'm aiming for $800 movement up to take profit here and flip short again. But maybe it was me being greedy, so I think instead next time I'm just going to hold a short down, because I do believe the longer time frame thing is down, right? So I should have just held that short down, but it's okay. I took a loss here, not that much, so it's okay. And whether you ask me whether I reshort, once I close already, I don't reshort until it gets higher, because if I reshort lower than where I previously shorted, that would be like selling as it goes down, and that's not ideal for me. I'm trying to buy when it goes down and sell when it goes up, right? So I try to stick to my principles. I took a loss here and I just waited. So nothing much to add. The stops got triggered here about when was this? Okay, so the stops got triggered right around this point. I think it was April 1st. Still here. Yep, the stops got triggered and I just waited lah. So I said there was a very strong point of confluence coming in around this region, and I'm going to look out for these areas of region of support, but I did not take any positions. I only considered going for longs under 44k, and I didn't break under 44, so I didn't take any positions. I missed this whole movement up, but that's fine, because I still believe that we'll retest 43 eventually. So I was looking for reshorts. I waited. I didn't delete anything here. You can go and check the chat and anything else, but yeah, so I didn't get. I transparently said I didn't manage to get a long, so I didn't get a long here, and it's okay. I just waited. I'm okay with missing out a move, you know. Like, I realized that like over the course of my time trading, missing out one move is not the end of the world, because you can look at a bigger time frame movement, right? So I'm looking at shorts around this region. So you can see, right, that around this whole period here, I was waiting. I was being very patient. I said that I'll punt a small reshort at this region at 1:43 p.m. This is GMT plus 8 and this is UTC plus 8, so you can do the calculation. Around this period I was looking and I was patient. I was waiting for 46.8 to 46.9, which it was a pretty good entry. So right at about this period, I just got in at this period, April 2nd. I remember it was in the afternoon, I was eating lunch and I was like, okay, it finally hit 46.9, I gotta get in here. I got in there and I waited. Right, so even though I didn't close at the exact bottom of 44.2 and I didn't take the shot from I didn't take the long up here, I took that shot from the initial part there, so I'm happy enough to take the 47 to 45. That was the big movement I made already, right? So there are some bigger trades and there are some smaller trades. As long as you risk manage well and you make your wins bigger than your losses, you should be profitable. Right, so you can read some of my explanations here. I'm not going to make this video too long. Right, after that, I'm looking at 45 to 45.4 as a decent area of support, and I still think we're going to test the 43 lows. So you can see that I was very adamant that we're going to 43.2 and 43.4 even at April 3rd, and right now we're trading at that current price point. So yeah, all the while my stance is the same. I believe that we're in a wedge and I believe that the wedge will break down, but I also fully understood that there will be wicks. So after taking this shot at 46.8, I just waited. We broke under 46k, but I said closing is up to you. So I didn't want to close. I just said it's up to you, but I will not be closing, right? I already gave the levels I'm looking at, which was 43 and 45. So I waited and I waited, holding on to short still, I do give some forex updates there, so you can go check it out. You can pause the video and go check it out. Then I still mentioned that I'm in my short. So I do give updates every day saying that I'm still in my position. I'm looking at the larger time frame. I wait. Finally at 45.1, I closed most of my positions. So I closed most of my positions here, right? I gave my target area above that. I said 43 and 45, right? I do believe that we'll at least bounce off 45 first before we go to 43. So I was looking at 45.2 to 45.4, and some of my targets changed lah. Of course, after a while, I said after 45.2, I saw this breakdown. It's okay. We should probably go a little bit deeper, a little bit greedy. So I just chose to close at 45, 154. Fully closed 60% of my positions. 145, which is right at the bottom and like here. So I took a close here and I didn't flip long. I only closed 60% of my positions. Why did I choose to close 60%? Okay, this is a learning lesson for a lot of traders, right? The reason I closed 60% is that if I'm wrong and it still drops to 43, I can close the other 40% there. I wouldn't feel so bad psychologically. But if it runs up, which I do expect since this is a support, I close 60%, so I can choose to reshort. So I closed 60% and it ran up, and that was a good thing because I could opt to reshort. And I did say that we did run up to 46.8k today again. This is 2:44 p.m. on April 5th. So April 5th, around here, we ran up to 46.8. I'm looking at this region. I said, hey, we're going to short around this region. Loaded back in my short, 9:34 p.m. GMT plus 8. I started loading back my shorts here and here. I loaded back my shorts and price was about 46.7. Obviously, we did a final wake up, but I'm okay because I took this profits all the way down here. I already took a lot of the pain away by closing most of my shorts here. So I'm okay with holding this pain up, right? So I just hold. Like in general, you can't be priced out by false price action. You gotta realize that these are false price action. This is because there is high leverage and there's a lot of, you're trading derivatives. There's always wicks, okay? So I hold the BTC short, enter price about 47.6755, and I'm not closing actually, no. I was holding it down. So I was looking at this for my closes. I drew this ahead in advance. You can look at the price here. It was about 45k. I said we're going to go under 44k. And I said that under 44, I'm going to close my shorts. And we'll prospectively flip long there, which I did. So I'm a man of my words in the sense that I choose my numbers and I follow through with my ideas. Unless they're wrong, okay? But I'm more flexible with my stop loss, right? So in general, I just order set at 43.8. This was yesterday. This is April 7. This is April 6. Yesterday I closed at 43.8. So I held it all the way down, okay? This short, I held it all the way down to here, 43.8, and I closed off all here. Obviously we went deeper than that, but it's fine because I chose to flip long here, right? So it's okay. I always said that I will close my shorts before I flip long. So this is shorts closing, this is flipping long. So in general, after I was going to punt a very small low leverage long at this support region. So this is about night April 6 and April 7. We're gonna so this is the latest updates. I just bought in at 43.3 at about 12 and 2 p.m. today. Right now we're trading a little bit above it. I do believe we will retrace back to 44. I think we'll wick above this 44 for a while. I don't think this will be long standing. I think it will hold for a while, but I still think that given the overall climate of the interest rate hikes coming and the fear of recession, I don't think Bitcoin can hold its place as a recession proof. It is not a safe haven asset. There's not going to be a flight to safety of it. Gold will still be there will still be a flight to safety towards gold because gold is gold, right? And Bitcoin, you can say it's digital gold, but I don't think it has been long standing enough, and I don't think it has ride the passage of time like gold. Gold has been around for like a few thousand years, man. So I mean, like, what are you talking about when you're talking about crypto? It's volatile assets tend to not hold its value that well. Of course, it will bounce off support, and I will be a buyer at certain regions, and I'll be a long-term buyer as well. But you gotta be cautious whenever you buy, okay? So it's not saying don't be a buyer, just be a buyer at the right time. Alright, so now I'm gonna move on a little bit about Tesla and some of the stocks I'm looking at. Okay, so Tesla, I gave a very quick summary that I was looking at it breaking down a couple of days ago to at least to the 1030 region. I think that it was gonna fill this gap. Also to mention, I don't think gaps are generally gonna hold true when you're talking about something like Tesla because it's run by a visionary, a maverick, or the largest influencer in the world. You want to call it. Elon Musk can pump and dump whatever he wants. He just bought Twitter. It went crazy up. He bought only a 9% stake. He made shit tons of money from that. So in general, when you're looking at Tesla, take all this market gaps with a pinch of salt. But generally, market gaps will close in this kind of scenario where the overall climate is very volatile. Okay, so a lot of people will get pushed out of their shorts and longs or their calls and puts, and there'll be a liquidation cascade. And the things I normally generally look at will be your max option theory or your liquidation theory. And we're looking at a retracement back to your 0.618 level at least. I think we can at least see 3-digit Tesla once again. I'm not going to rule out the fact we won't see 3-digit Tesla again. I'll put it out here. I'll say that we'll see 3-digit Tesla again. I'm not a buy right now. I sold most of my Tesla at 935, so not that great even. Like I bought all at 780 in March 15. So I'm fully closed on the calls. March 15 I bought at 780 and I exited at 929. So I've not even gotten back since then, right? So if you can look at March 15, I bought all my Tesla around here. I can remember the dates I did it. So Tesla waiting for 770 on initial puts. After I closed the puts, I long green region at 775, right? So I basically flipped into calls around March 15, I remember. So I held all this Tesla from 780 all the way to 935, and to me that's good enough because I was doing it on margin slightly. So that was kind of my play. Right now you're asking me stocks that I'm looking at. I'm obviously going to still say Vail. The reason I say Vail is because it's a iron ore and a silver producer. So in general, I feel like this still has a potential to trend up because when you're looking at producers of commodities or like silver or this kind of assets, right, they tend to be more valuable in times of a recession or a supply shock, right? People want to hold into more safe haven assets. But if you can't buy the actual safe haven asset like gold or silver, you can also buy into their miners, right? But be careful what you buy. I always mention not to buy stuff like NUGT, this kind of stuff, because there's contango. Because there is a 2x share, it means that it's leveraged, and because they're using futures, there's decay over time. So if you look at the larger time frame, remember to look at the larger time frame before you buy into anything long term, because if you're buying into a leveraged fund, there is contango, right? So yeah, it will drop over time, right? Maybe you look at the monthly, it'll be very evident, yeah. So it drops over time, right? So above this, I'm also looking at LMT. The reason I look at LMT, like I've been writing in the chat, you can go and check it out. I put it in the private and the public chat, is because I think LMT has potential in the long run because it is tied directly to US defense, right? And LMT is one of the producers for US aircraft and carriers, right? For their defense. So in general, US actually spends the most on defense. They spend almost $1 trillion. They spend about 700-800 billion. I think it's only followed second by China, which is 300 billion. I'm remembering all this offhand, so forgive me if I'm a bit outdated with the numbers and what all, but that's as far as I remember. It's and above that, right, you got to consider that we are in a climate of a global supply shock. We are in there's a Russian-Ukraine crisis. There's so much going on, right? And I don't think this is where US steps off the pedal for their defense budget, right? If anything, if they step off the pedal, they're gonna lose a lot of jobs for their military, and that's not even what they want, because they want to keep employment high in some sense, and they will not cut defense budget in such a climate. Just be sure on that, right? And above that, it's like I just feel like buying into this in the long term, it's something safer as a defense stock. Your beta is not as tight correlated to the market beta, so I'm not against buying this. I've been buying it consistently, but obviously I don't throw my whole war chest inside there. It's a matter of portfolio diversification. You allocate certain proportion of your portfolio into defense stocks, certain proportion into commodity stocks, certain proportion into some kind of real estate stocks or REITs, or even McDonald's I mentioned before could be a form of real estate diversification because they have a lot of land and they have a lot of farmland. So do your research in certain things, and I'll try to give more analysis on the different stocks I buy also. So in general, that's roughly the case for what I'm looking at. We also had the XE hack recently. I mean, if you're buying into kind of NFT gaming hype, just be more cautious with it, because crypto is quite illicit and there's a lot of rug pulls, so just be careful about that. We also have the Waves Pundi, you can go read out about that. If you Waves USDM rug pull, if you want to call it. I think they lost the peg to the dollar peg to their US dollar token. There's so many tokens right there. So I can even go into the details of stablecoin and how they collateralize their stablecoin. There's GUSD, BUSD, USDC, HUSD, TUSD, USDT. There's so many, right? There's at least like 10 stablecoins, right? And there's DAI, there's MakerDAO, they are backed by different kind of things. So what gives the stablecoins value? If you're buying something on crypto, you're using a stablecoin like USDT or USDC. What gives it its value? First of all, you got to check out what they're backed by. If it's backed by Gemini, Coinbase, GUSD or USDC, they tend to be a little bit more stable. Stuff like BUSD, Binance, subjective. They're going through a lot of regulatory talks. I'll go into detail about more of these stablecoins and the dynamics later on, but I'm going to take some time to prep up my material so I know what I'm talking about. But in general, I hope you enjoyed this session. I can't talk for too long, but remember to like, share, and subscribe. I'm gonna head off here, and thanks for watching. Like, I also want to take note that if you want to check out my referral links to use the exchanges I'm using, you want to check out my trading guides. They're also in the website. My video lessons are also in the website. You want to check out the free Telegram channel. I'm gonna do it there. I'm trying my best to give out as much information as possible, but I'm also limited by my time, and it's my first time using this kind of a production setup, and I just moved in. So yeah, my new place. So I'm not really like comfortable with everything right now, but give me some time and I hope I can do more, right? So thanks for watching. Like, share, and subscribe. See you guys next time. Bye.